Andrew Schectman, welcome to Nature of Reality Radio. You are the president of Miles Franklin, which I believe used to be Midas Resources. I bought a few guys back in the day, some precious metals when I was really getting into the precious metals business when I was listening to Alex Jones of InfoWars around 2012. I was a sucker, though, by Lindsey Williams into thinking that the dollar was going to be dead by the end of 2012. That turned out to be a complete and total lie. But it seems like we are in a period where inflation is going crazy, and my angels and guides seem to have directed me to get a lot of precious metals people and financial advice people on my show for whatever the reason to help out people in this time of great challenge that we are in. So it's great that I was able to get someone like you on the show. So I will shut up and put myself on mute and let you talk. I don't have Alex Jones-itis. I do not interrupt my guests. But I would, if you were used to be Midas Resources, why exactly did you change to Miles Franklin? And do you want to tell us that story? Tell us the backstory, and then get into all the precious metals stuff why you got into that, and then we'll go from there. I'll let my angels and guides guide me, and let's make this the best possible show that we can. We'll get into the really nitty-gritty stuff about the American economy and the world economy later on, of course. But you've got the floor. Please introduce yourself and your business. How did this all get started?
Well, it's good to be here, Andrew. No question about it. Well, we never were Midas Resources. We actually purchased Midas Resources over 20 plus years after we established as Miles Franklin. The name Miles Franklin is derived from my father's middle name, which is Miles, and his best friend, who loaned he and I $60,000 in 1989 on a wing and a prayer to start a company. The original impetus of Miles Franklin was Swiss investments. I spent 3 summers in Zurich learning from Swiss bankers, learning about precious metals, and more relevant to our initial charter, Swiss franc annuities and investments. We were the U.S. contact for the Swiss insurance industry in throughout the 90s. We still have an affiliation with BFI Consulting out of Zurich, a group whom I have the highest of esteem for and can help people get Swiss investments. But we quickly realized that the same person who bought Swiss francs bought precious metals, and about 8-9 months into our new business endeavor in a one-room office, just my dad and I, tiny little one-room office in Minneapolis on a wing and a prayer, literally. Recently, we just eclipsed $7 billion in sales over 32 years. Along the way, we have become one of only 24 United States Mint authorized resellers, an honor that I am most certainly proud of, maybe our greatest achievement. We maintain an A+ rating with the Better Business Bureau. We've never had a complaint levied against us either on the Better Business Bureau or online. You can search, you won't find it. Not to say we haven't made mistakes, we have, but we always make right by them. And so I guess you could say, really, in terms of reputation, 32 years, $7 billion in sales, U.S. Mint authorized resellers, worldwide exclusives with Brinks that no one else has, and never a customer complaint. But all of that is meaningless to the state of Minnesota. Now, I moved to Florida a year ago, and it was the best move I ever made, because Minnesota, where I grew up and raised a family and loved being from and was always proud of, Minnesota has turned into a place that I hardly recognize. And so we moved. I voted with my feet and moved to Florida a year ago, but we left our corporate office in Minnesota. And the reason we did that is that the precious metals industry is a federally non-regulated industry. It's akin to the Wild West. There's no government oversight. And as a result, we've seen several $100 million stolen from bankrupt companies whose owners and or presidents are in prison. The latest being Northwest Territorial Mint, where husband and wife were just sentenced to a very long time in federal prison. Hannes Tulving and Bullion Direct before that all totaled over a few $100 million siphoned away from the public, never to be found again. State of Minnesota is the only state in America that regulates what is a federally non-regulated precious metals industry. And as a result, we are held to a higher standard than just about anyone because nearly 100% of the companies in the United States have boycotted the state of Minnesota. In order to do business in the state of Minnesota, you have to be licensed, bonded, and background checked. So every year, everyone in my company, myself included, is mandated to a background check. And if any of us had felonies related to financial services, you're forever disqualified from the industry. We have to take continuing education, anti-money laundering, know your client, all this kind of continuing education, preparedness for money laundering and that kind of stuff to maintain a license. And we are bonded with a very large surety bond. And that's really the one that more or less makes everyone say, screw Minnesota, I'll work elsewhere. What it means to the consumer is that not only do I believe we have the best reputation in the industry as U.S. Mint representatives, never having a complaint, but the state of Minnesota puts an exclamation behind that with a very large surety bond and licensing that is really only relevant to companies in Minnesota. If a company outside of Minnesota sells into the state without being licensed, they will be sued and or attempted to be shut down. So everyone has just boycotted Minnesota. Along the way, Midas Resource was a company in Minnesota, and they ran into some hiccups and shut down. One of their employees, one of their salesmen, became a salesman of mine, introduced me to the owner. I made an offer to the owner and purchased his list of clients. So that's where Midas Resource comes in to play. So we were never Midas, but I looked at it as an opportunity to expand my client list and purchase the client list from the owner of Midas.
Okay. Thank you for that nice little introduction there. And so I guess now we'll get into let's get into gold and silver, and we'll get into some of the other precious metals too. But gold and silver, pick your poison. Well, it's not poison. It's definitely the way to go in terms of money. The dollar is, and all the other currencies are worthless shit. They are backed by nothing. They are fiat currency. And the problem is that so many people in the present day have been living under the thumb of the Nixon shock for so long that we simply cannot come to grips with the idea of living under a gold standard. And it has come to my attention from some sources that the reason the man who should be in the White House but is not in the White House did not get into the White House, he was actually planning to put America on the gold standard in his second term. And that's the reason he put a portrait of William McKinley up in the White House near the end of his first term. The criminal bankers who run the world would have none of that. So they decided to make sure that he lost the election. And now we find ourselves with a demented Joe who doesn't know squat. So the problem now is that we are running crazy with inflation, and people should be buying gold and silver, I think. But how do you know whether to buy gold or silver? I mean, they say silver has a lot of industrial use. Okay, well, how does that make it any more or less better than gold? And of course, the question, how do we know how much gold and silver is worth? Well, in the end, it's worth whatever we as a species decide that it's worth. But the important thing is the prices of gold and silver have obviously been manipulated, especially since the Nixon shock of 1971. And, well, how do you know which one is the better one to go? A lot of my friends in the spiritual community say silver is definitely the way to go because silver, that's more of it's more spiritually enticing than gold is, even though it may not be worth as much in terms of monetary value. But okay, I'm saying a lot of things here. Why don't we just get to the baseline here? When it comes to deciding what gold and silver are worth, how does one make sense of that? How do we know how much gold and silver is worth? How is the price determined? Let's start with that. Price determined.
Well, in order to answer the question, I think properly, I need to paint a picture, because if I give you an answer without really painting the picture, I think it's not a complete answer. So you said a lot, so I'm going to talk about a lot and address it as we move on. For those people who don't really understand, I guess when you say the Nixon shock, I'm interpreting that as Nixon closing the gold window in 1971. But let's go back much further than that, and draw a progression of events that will answer your question in a few different ways. I think for your listeners, it's important to understand the foundation of where we are going, and the relevance of both gold and silver. Before I answer the question, I will answer the question, but I'm going to answer it the right way after. My answer is that silver is the buying opportunity of a generation, but ultimately we want to be in gold. Let me tell you why. We go back to the end of World War II. The Allies met at Bretton Woods, New Hampshire, and created the Bretton Woods Agreement, which anointed the dollar the world reserve currency, taking over for the pound sterling. And the dollar would be pegged to gold for international purposes. Governments around the world would take our dollars. They could exchange them for gold at a fixed rate. And this was the case, giving the dollar the world reserve status, backed by gold, for a very long time. As we reached the tail end of the Vietnam War, de Gaulle from France realized that the U.S. was printing more dollars to finance the Vietnam War than they had, and issuing more treasuries, which is basically just a future call on dollars, than we had gold backing those issuances. And so he sent warships over to New York Harbor filled with dollars to convert. And tail end of the 60s, over half of the gold held at the U.S. Treasury was depleted to where it is now, supposedly somewhere in the neighborhood of just over 8,000 metric tons, although it hasn't been audited since 1956. So in 1971, in August of 71, Nixon temporarily, anyways, he says, closed the gold window, severing the tie of gold to the dollar, making it, as you say, completely fiat. 3 years later, Henry Kissinger flew to Saudi Arabia, and he said to the Saudi kingdom, we're going to protect you, we're going to sell you ammunition and munitions, and we'll protect you. We'll call it a joint military cooperation agreement. You will, for that privilege, you will denominate oil globally in dollars. And since 1974, nearly 100% of all oil sold around the world is in dollars. This is what has given the dollar its world reserve status. And it's because every single country on the planet that buys oil, which is every country on the planet, needs to buy dollars. So this synthetic demand for the dollar is courtesy of our protection of the Saudi kingdom, and for that, OPEC's valuation of oil in dollars. So that sets the stage for where I'm going to take you now on a journey of the last 4 or 5 years. And I'm going to show you a linear progression of events that I think will ultimately lead us to gold. But I will say to you that silver is the best investment on the planet. And I'll clarify all of this, but I want people to understand my line of thinking. Now, before I mention that, I will tell you that I've been buying gold and silver every 2 weeks for 32 years. When I started this company, I was 19 years old. My father said, "You'll buy something every 2 weeks or I'll fire you." That was the only rule that he mandated when we started this company. And although I've owned it pretty much exclusively for the last 20 years, he's been retired. He's still my partner. He's not going to fire me any longer. But I have honored my word. And I have bought gold and silver every 2 weeks for 32 years because to me it's wealth. All right. So when we talk about all of this, understand that I'm not pitching gold and silver to get rich. To me, gold and silver have always been immutable wealth for 5,000 years, through 2 world wars, through German hyperinflation, through the Great Depression, and every pandemic along the way. When I speak of and think of metals, I am not trying to get wealthy. I am trying to transition out of a system that is dying, the Keynesian-based fiat system, into historical wealth. So anyways, let's go back to 2000 and let's call it the several years leading up to 2017. From 2000 roughly and 1 to 2011, gold appreciated every single year by 10, 12, 15%. It was a decade-long bull market. From 2012 to 2017, it was a 5-6 year protracted bear market. And during that bear market, it was very obvious that the central banks were all selling gold in search of yield. And so it never really made sense to me why a central bank would sell its gold in favor of yield, but indeed that is what they were doing. And it subsequently makes sense to me now, but back then I really didn't quite understand it. You see, because gold used to be a tier 3 asset. And a tier 3 asset meant that only 50% of the balance of the value was calculable on a balance sheet. So when the new kids would come in and take over for the old gray hairs in the central banks, they'd look at a position of gold and they say, "What the hell do you want this for? It costs money to store, it earns no interest, and we're only able to calculate 50% on our balance sheet, which inhibits our ability to sell bonds and do international business. So let's sell our gold and buy treasuries," excuse me, which pay interest and will allow us to leverage our balance sheet by making loans and selling bonds. So anyways, the trend over those years was to sell gold and to buy interest-bearing investments. So 2017, everything starts to change. Now, you have Bitcoin jumping on the scene. You have people selling gold in the retail industry. What used to be, and forever since, has been 1 out of 100 orders we do is someone selling, maybe even less than that. In 2017, it was 7 out of 10. People were selling and buying Bitcoin. They were buying the Dow Jones, which was roaring higher. And they were looking at gold as nothing but a lead weight sinking to the bottom of the ocean that had gone straight down for 6 years. I understood it. It was a rough time to own a precious metals company. And then all of a sudden, something happened. In 2017, the German Bundesbank said to the New York Fed, "Give us back our gold that you've been holding since the end of World War II. We want all our gold sent back to us." and we want it back no later than 2020. So this was very unusual, really, at a period of time where central banks were selling. The German Bundesbank said, we want our gold back. So within a few months of that happening, the Bank of Austria, the Dutch National Bank, the Bank of Poland, Hungary, Turkey, and several other European banks all followed suit. Give us back our gold, they said. Also to the Bank of England, give us back our gold. So we've begun to see out of nowhere a massive repatriation of gold that was held at the New York Fed and at the Bank of England. So they would keep gold there at the Bank of England because it was close to the London Metals Exchange and as for trade at the New York Fed and credit balance. Now they said they want it back. They want to hold it themselves. In 2018, the following year, those same central banks bought more gold as a group than they did in the previous 60 years combined. So now they go from repatriating gold to accumulating copious amounts of it. In 2019, those numbers were up 100%. So you got almost 2 years of steady accumulation of gold by the world's central banks and repatriation of it from the Bank of England and the New York Fed. In April of 2019, the Bank of International Settlements, which is the central banker's central bank, reclassified gold as the world's only other Tier 1 reserve asset. Well, let me just repeat that one more time. Bank of International Settlements, which is the central banker's central bank, reclassified gold as the world's only other Tier 1 reserve. So why not choose special drawing rights from the International Monetary Fund or euros or yen or anything? Why choose gold where for 80 years nearly it had only been US dollars and treasuries that were Tier 1? That's it. Tier 1 is a riskless asset. It's collateral in international trade. In other words, if I write you a check for $1 million and you give me a briefcase with $1 million in cash in it, and that check I write you is a loan, and that $1 million in cash is collateral, I have zero risk. It's riskless. It's Tier 1. Well, the central bank said now gold would be the only other Tier 1 reserve in the world, period, next to gold or next to dollars and U.S. treasuries. This is a very big deal that our horseshit media doesn't talk about or tell any of us what's really happening. So now, for the first time since the end of World War II, the dollar has a challenger, or at least in terms of its reserve status, in terms of its Tier 1 status. So 2020 comes along, those numbers continue to increase. You get Klaus Schwab out there saying the Great Reset's coming at the World Monetary Organization. The Great Reset is coming. You get the International Monetary Fund, which was created at Bretton Woods, which is a conglomerate basically of about 190 countries from around the world. And they came out on their website and said, we want a new Bretton Woods. Here again, our media doesn't tell us anything relevant. You have 190 countries saying we want a new standard, a new Bretton Woods standard. Well, the Bretton Woods standard was what anointed the dollar world reserve. So far you have massive accumulation of gold, repatriation of gold, gold being classified Tier 1, and now 190 countries saying we want a new standard, none of which is talked about by our media, which is pathetic as far as I'm concerned. 2020 comes along and you have some groups on the COMEX that we've never seen before. They're managed money traders, and the COMEX every week publishes a report called the Commitment of Traders. The Commitment of Traders report shows the positioning of the largest traders on the COMEX market, which is the commodity exchange. And my whole career, it had two columns. One column was the commercials, like JP, Citi, Goldman, and the other was the specs, the hedge funds. And it was a zero-sum game. If the specs were long, the commercials were short. If the commercials were short, the or long the specs were short. And it was, it was one or the other. And no one ever took delivery off of COMEX. Rarely, if ever, did anyone take delivery, even though you can. And in 2020, we see this group called the Others show up. That's how they titled them, this third group on the COMEX market. And the group, the Others, are thought to be sovereign wealth funds, predominantly maybe family offices. In 2020, they took more gold and silver off of the COMEX market in terms of deliveries than the market had seen in the previous 10 years combined. And that trend is continuing till today. So let's just follow the progression of events. We talked about gold being reclassified. We talked about repatriation and accumulation front-running this decision. Obviously, the central bankers take care of themselves. We see that trend continuing. We see the International Monetary Fund asking for a new Bretton Woods. We see the rise of the most sophisticated, well-funded private traders on the globe draining metal off the COMEX market, doing the same thing off the London Metals Exchange. We see them not just doing it with gold, but also with silver. We then see what I believe is the second biggest event of my career, the first being the reclassification of gold, the second being the announcement of the Chinese Belt Road Initiative. This is happening right now. And believe me, I'm coming to an answer with the question, but you need to follow this progression to see how severe this really is and how important it really is and why it's wealth. And why, if you are holding nothing but dollars, you are destined to go broke, and very quickly. So the Chinese Belt Road Initiative comes along, but before the Chinese Belt Road Initiative comes along, we see the Chinese develop a few things. One is the Shanghai Gold Exchange. One is the Chinese petro-yuan bond. We're going to talk about those in a moment. The Shanghai Gold Exchange mimics the COMEX. The Chinese petro-yuan bond is a bond that the Chinese use to purchase oil and natural gas and coal and from other countries, pay for it in a bond denominated in yuan that is immediately convertible into gold on the Shanghai Gold Exchange. All of this is going to come into play here in a second. So 2020, we see the new big traders start draining COMEX quietly. And, people are saying, well, why the hell hasn't price gone up if all the central banks have been buying it? It is because gold and silver are massively manipulated. And we can talk about that, too. I think I know as much about that as anyone in the country. But they were using the manipulation of the spot price through levered futures contracts to run cover for their acquisition, to de-dollarize. Anyways, the Chinese Belt Road and Rail Initiative, another massive deal that our media does a horrible job of telling us what's important, is embarked upon. It is the largest infrastructure project ever attempted in human history. It is connecting Asia and Africa. It is connecting it not just with maritime channels and roads and bridges and railways, but also digitally. So the need for silver in a digital aspect is extraordinarily high when you realize that this connection is connecting 75% of human population, 45% of global GDP. When we talk about silver, the duality of silver, the demand that silver offers in a duality capacity, meaning not just a monetary investment like gold is, but also hugely industrial. In anything that is digital or electronic, it has silver in it. And when you talk about industrializing and connecting digitally 75% of human population between Asia and Africa, the need for silver on a industrial aspect is extraordinary. And we'll talk about that in terms of the allure to silver in a moment. But this project will be connecting all of these people, and the United States is not part of it. And it is all being settled on the new Chinese digital yuan. All right, so it's a central bank digital currency that I ultimately believe will be pegged to gold. We'll get to that in a minute too. But in any case, you have 75% of human population being indoctrinated into a new currency, one that sidesteps the U.S. dollar. And so that leads us here to 2021. 2021 comes along and we see some very interesting things. The biggest being perhaps, and I'll call it the third biggest event, the first being gold being reclassified Tier 1, the second being the Chinese digital yuan issuance through the Belt Road Initiative, and the third being the day we left Afghanistan. Now, I've talked a lot about this lately, and I started talking about it vehemently the day it happened. The day we left Afghanistan, in a very unharmonious fashion, something happened that, again, our ridiculous media doesn't talk about. And this may be the biggest event in all of our lives. And when you talk about the Great Reset, this event, to me, was the beginning of the Great Reset. And I will explain that through. But it goes like this. Remember what happened in 1974, right? 1974, Kissinger went to Saudi. We'll protect you. You denominate oil in dollars. Globally, the dollar is the world reserve currency. It's called the petrodollar because you were right. When Nixon closed the window in 71, it was rendered fiat, meaning nothing backing it but the printing press, the military, and the ability to throw you in jail for not paying your taxes. So that was what was backing it, not gold any longer. So since 1974, our protection of the Saudi kingdom has given the dollar the world reserve status. The day we left Afghanistan, and I think it was, or the day after, there is no coincidence to this, Russia announced a joint military cooperation agreement with Saudi Arabia. The day after that, Russia announced a joint military cooperation agreement with Nigeria. The day after that, Russia announced that all of their nuclear submarines were outfitted with hypersonic ICBMs. The day after that, the State Department came out and said hypersonic ICBMs are something we are very disturbed about. We do not have that technology. We're very concerned about it. That was their way of saying, do not even think of messing with us the way you did Gaddafi and the way you did Hussein, both of which said we are going to sell our oil in euro. So I believe that was the beginning of the end of the U.S. dollar. That brings us to 2022. Nigeria has already agreed it's inked. They are now going to sell their oil to China in yuan. Russia is selling their oil, their natural gas, and their coal to China in yuan. Saudi Arabia is in full negotiations, and it looks like they will too be selling their oil to China in yuan. Now, these countries may not want yuan, but remember, it is convertible into gold immediately on the Shanghai Gold Exchange. You are witnessing, through the weaponizing of the dollar, our adversaries are being forced into leaving the dollar. The Chinese and the Russians created something called CIPS, the Cross-Border Bank Payment System. This mimics the SWIFT. They already have the Chinese petro-yuan bond, which will usurp the petrodollar. They have the Shanghai Gold Exchange, which will usurp our commodity exchange. They have the new Chinese digital yuan, which is being rolled out to 75% of human population. Do you see where I'm going with this? Do you see the trend away from the U.S. dollar as the single world reserve currency? And our Fed chairman came out 3 weeks ago and said, well, you know what? There's probably room for two world reserve currencies, acquiescing to the reality that this is where we are going. So let's talk about what this really means, and then I will finally answer your question, what do you want, gold or silver? What does this mean? You know, in 2020, I was telling people that 25% of every dollar ever created had been done in the last 12 months. In 2021, I was telling people that 50% of every dollar ever created had been printed in the past 2 years. The new numbers are out now. People can Google it. 80% of every dollar ever created, 80% of every dollar ever created in the history of the United States has been done since 2020. You are talking about an environment where you've got a ridiculous president coming out and blaming Putin for the price rise in gold, in gas and oil, yet gas was up 40% and oil was up 80% before the Ukraine war even started. It is courtesy of massive amounts of money printing and stimulus that has created what Austrian economics would call the crack-up boom, where you have a massive amount of expansion in credit. You have low interest rates and an expansion in credit, which creates misallocations of capital and resources and distortions in price. Look at the price of your home. Look at the price of the value of your 401k. Look at everything has gone parabolic. Go to the grocery store, buy 2 steaks and a box of strawberries, you're over $100. When you talk about inflation, inflation is roaring. It's much higher than we are led to believe. The CPI measurement says 9%. It's actually 16% if you simply use the metrics that were used prior to 1980, when at that point they changed the CPI measurements to fit their inflationary agenda. The CPI, which is the Consumer Price Index, does not take into account food, energy, and housing, all of which are going through the roof, with gasoline at $7 in California, with natural gas doubling, with everyone's house doubling, and for whatever reason, including the food that you get at the grocery store going through the roof, are not included in the measurements of the CPI. So you have a situation here now where you have inflation roaring. You have a government that is addicted to printing money. You have markets at all-time highs, stocks at all-time highs, real estate at all-time highs, and bonds at all-time highs, because all of this money that was created, the real inflation is in financial assets. All of this money made it easy for hedge funds to borrow money at next to nothing and pummel it into buying real estate, buying stocks, buying cryptocurrency, buying whatever, bonds, whatever it is. And all of these markets are at all-time highs, inversely correlated to a rise in interest rates. So, you have a Fed saying we're going to get tough on inflation and we're going to raise interest rates. And so the Fed isn't going to do shit, because if they were, if the Fed was committed to fighting inflation, then why are they waiting until May to raise rates by 50 basis points? Now, right now, the federal funds rate is 25 basis points, excuse me, and inflation's at 9%, 10%. So you're negative almost 10% on a 10-year treasury. Let me take that back, because the 10-year treasury is a little bit higher. But when we just simply talk about the federal funds rate versus inflation, it's about a 10% disparity. The only way that you can get rid of inflation is to raise the federal funds rate commensurate with the level of inflation. You'd have to raise the federal funds rate to 10%, which would then be a situation of equilibrium. You'd have 13% mortgage rates. You'd have a bond market that would lose 95% of its value, and the stock market that would collapse. It would throw us into a depression. But if the Fed was really serious about inflation, then why wait a month and a half to do this, to start shrinking your balance sheet? Why not do it now? If they were committed to high inflation, then why did they continue to grow their balance sheet even after they acknowledged it wasn't transitory? They're talking about a 50 basis point rate hike. Big deal. They should be raising rates right now and much, much higher than that. But what that will do is collapse the economy. So where does all of this lead? Well, let's go back to losing the petrodollar status. If we wake up, and you talk about the Great Reset. I always thought it was ridiculous. But what if it's what they want? What if the powers that be realize that we have created an environment that is not sustainable? We're the largest debtors in the history of the world. We have, when you factor in Medicare, Medicaid, Social Security, and government military pensions on top of a $30 trillion debt, our indebtedness exceeds $125 trillion at the lowest interest rates in human history. Maybe the powers that be know that we'll never pay it off, right? Some people think that that's why the virus was created, to blow up all of the Keynesian-based economies and blame a virus for it. and everyone would blow up their economies and everyone would be locked down and we could just start over. Well, that didn't work. But what about blowing everything up and blaming the Chinese and the Russians? Well, how do you do that? Well, it's very easy. You create 80% of every dollar ever created in the history of the United States. You blow up all asset prices, which are all for the very first time inversely correlated to the rise in interest rates. Stocks and bonds used to be inversely correlated. And they are no longer inversely correlated because interest rates have been manipulated. If interest rates rise, it all collapses. All of it. Stocks, bonds, and real estate immediately all collapse. But the fourth pillar of wealth is the dollar. And I could never figure out how the hell they would pull this off. Well, here's how you pull it off. You weaponize the dollar, you kick the Russians out of the SWIFT system, you force them into the open arms of the Chinese and their CIPS system. You have Russia, India, China, Brazil, South Africa. You have almost 7 billion people, compared to our 1 billion people in the West, all being awoken to sanctions, to fascist type of decisions made by governments that pretend to be democratic. And you have a situation where if we were to wake up one morning, and maybe this is by design, and OPEC says we are no longer only selling oil in dollars, we're going to sell it in yuan, in ruble, in the new Chinese digital yuan, in all sorts of currencies. Here's what's going to happen. And it'll happen on a Friday night or on a Sunday night, and they're open and we're still sleeping. You will see markets absolutely collapses. All of those dollars come flying home, creating hyperinflation that we needed least. And here's what happens. Stocks, bonds, real estate, and the value of the dollar all collapse all at once in a blaze of glory, all at once. And when that happens, there's no escape, zero. And the likelihood of that happening is growing by the day when you see the actions that are taking place, when you see Saudi Arabia and Nigeria now, who are protected by Russia, Nigeria, part of the Belt and Road Initiative, now being protected by China as well, and Russia, now selling their oil in yuan instead of dollars for the very first time ever. The likelihood of this happening brings me back to 2019. Why did they reclassify gold as Tier 1? Did they know something? Did they know something was coming with the dollar? Did they see the mathematics of it? So look at the progression of events. Gold's reclassified, Tier 1, central banks repatriated, buy the crap out of it. The IMF asked for a new Bretton Woods. The biggest private traders in the history of the COMEX market come out of nowhere and start draining it. You got 190 countries saying we want a new system. You have Russia protecting Saudi Arabia and Nigeria, which is what has given the dollar its world reserve status. You have 75% of the world now being indoctrinated into a new currency. All of these countries, Brazil, Russia, China, India, they're all massively accumulating gold. Look at the progression of events. Look at where we're going. And then we wake up to find that happen. Bang! Like that. The dollar collapses. And inversely correlated to a rise in interest rates are all three pillars of the markets at all-time highs. The pillars of wealth in this country are all inversely correlated to a rise in rates, and everyone thinks it's not going to happen. The Fed isn't going to be the ones that do it. It's going to be the market that makes it happen. And when that happens, everyone's brought down to the same common denominator. There's your great reset. They come in and issue a new central bank digital currency pegged to gold. Now, what does all of this mean? Well, I think ultimately because of the Tier 1 reserve status, because the central banks are buying it, because I ultimately believe no one will ever drink the Kool-Aid ever again unless a new digital currency is pegged to gold. Now, it won't be convertible because de Gaulle from France proved that convertible currencies convert, but it will be pegged, and they will use a distributed ledger to prove the veracity of it. So they will, Alistair McLeod says China has 38,000 metric tons of gold. That's 5 times what the U.S. supposedly has. They could come out overnight, peg it to gold, say, here it is on a distributed ledger. It's held in vaults, audited by Swiss vaults, audited by the big three. It's all there. overnight the dollar's done. Well, when you get the Fed chairman come out and say this, that there's room for a second world reserve currency, it only strengthens my resolve. But I do believe gold will be central to a new system. Gold will go to levels that people think unimaginable and will never come back down because it will be pegged to a new world reserve currency, a new system. It is the only way people will ever trust currencies ever again. But where does silver fit in all of this? Silver is, for 5,000 years, traded at a 16-to-1 ratio to gold. And that was pretty much its geologic ratio. It was actually closer to somewhere in the neighborhood of 10-to-1, but the logistics of it, they changed the ratio, and for thousands of years, it was 16-to-1. Over the last 150 years, the average ratio between the two has been about 42-to-1. Where we are right now at 77, 78-to-1, somewhere in that neighborhood, is rarefied air. It's only been at this level of half a dozen times in human history. But what's crazy about it is that it's coming out of the ground globally at 7-to-1, meaning it's depleting. It's found in nature in a form called epithermal, which is very close to the surface. And the big deposits were found decades ago. So from a standpoint of its geologic footprint, it is a depleted asset, and it is depleting to the point that it is coming out of the ground now at 7 ounces of silver mined for every 1 ounce of gold, yet it's priced 11 times that. And that is because of the massive short position on COMEX by entities like Bank of America, who are short 800 million ounces. Why in God's green earth they would ever do that is another question. And for your listeners out there who need a refresher on silver manipulation, I would tell them all to Google Chris Marcus, Arcadia Economics, Bart Chilton, Chilton. He was the former head of the CFTC who admitted all of this, admitted what JP Morgan had been doing, admitted the manipulation, admitted that they inherited Bear Stearns short position, admitted that he went to his superiors and said they need to be prosecuted, they're breaking the law, was told to stand down. It was a political decision, and then he died a week later. It's one of the most groundbreaking interviews you'll ever listen to, validating the manipulation to the nth degree, coming from the head of the former commodity police. Anyways, the bottom line with all of this is that you have silver coming out of the ground at 7-to-1. It's priced at nearly 80-to-1. And when you talk about what silver offers, it's duality in demand. It is massively demanded in industry, in green and digital applications. Look at all the car companies going fully electric. General Motors by 2030, Rolls-Royce, Volvo, they're all going electric. And so the need for silver in a digital world, think of the Belt Road Initiative connecting 75% of human population, think of solar panels, think of all of these green and digital applications that all need silver. But what makes it so unique is its duality, because it has experienced a global renaissance in monetary demand. And so you have the world that is waking up to inflation. It's not just here in the U.S. You have inflation at all-time highs since World War II in the United Kingdom, at 30-year highs in Germany, in multi-year highs in Japan. All across the globe, we have done a good job of exporting inflation. And, excuse me, so everyone across the globe is waking up to sanctions like Trudeau put in place for donating money to a GoFundMe campaign. Your bank account is frozen. They're waking up to actions like Russia being kicked out of the SWIFT system. You have a whole world of people thinking about alternatives to fiat currency, to the banking system, and to the controls that can be levied upon you as a result of it. So it's no longer just North American demand. The whole world is buying gold and silver. So you have a duality in demand with silver in a depleted asset that makes it probably the best investment on the planet. But remember, I said you want to be in gold. So let me tell you how that plays out. The first time I noticed an 85-to-1 disparity was in 2010. And was the second time in human history it had ever been that high. And this is when I started doing podcasts. I said, I got to tell the world, right now, they need to sell their gold and buy silver. And I told everyone, sell your damn gold and put it into silver now. We are at to 1 ratio, meaning 85 ounces of silver was worth 1 ounce of gold. That's 4 feet of snow in Death Valley in July. It's a complete and total anomaly. So within 8 months of that happening, if someone would have listened to me and traded 1 ounce of gold for 85 ounces of silver, within 8 months in 2011, you had $50 silver and $1,930 or $15 gold, 37 to 1. You almost tripled what you started with going back into gold. It's called playing the ratio. So right now, silver is historically undervalued. It's only been at this area a few times in human history. It is massively demanded in industry and monetary demand, and it is depleting in nature. So when that ratio corrects down to, well, at 30, 38, 39 to 1, you double right now. But if it's coming out of the ground at 7 to 1, you could argue logically that it is 11 times undervalued in its relation to gold. You could argue that if you had silver right now and it finds its geologic ratio, you could convert it into gold and get 11 times the amount of gold you could otherwise buy today. So this is a very long answer to a question, and I apologize, but I think it's really important to set the stage. I think you ultimately want to be in gold. But I think silver right now is the finest investment on the planet and is a pathway into getting more gold. And while there is no right or wrong answer to any of this, for me, money is best spent in silver right now. Ultimately, we want people in gold. And that would be my very, very long-winded answer to a simple question.
Wow, you are the man going that long to give all that information. And, well, I guess at this point, I'm going to increase the length of this show to 1 hour and 15 minutes now. So at this point forward, any listeners, please pay me on Patreon if you wish to listen to the rest of this interview. There was certainly a lot of valuable information in the first part, but I wish to ask a couple of other questions here. And one question I would like